can see screen. Good. Thank you so much. Thank you, thank you, thank you. Okay, awesome. All right. So right now, the market's a bit choppy. It's a bit indecisive. Um, we did have a few, a few swings here, a few $1 swings from 713 to 712. But nothing, no big moves, right? No huge moves here. It looks like the SPY is just kind of trying to figure out which way it wants to go for the day. So if you can see my screen, what I am looking at the moment is unusual whales. I am on the unusual whales platform. So I'm just gonna say everything very introductory, so that way everyone can kind of be on the same page, even for newcomers as well. So here we are on my screen. This is Unusual Whales. It's the only platform that I truly use to trade. I do have Trading View just to kind of like see like exponential moving averages, but for the most part, I typically use Unusual Whales, and I will take a trade without even looking at a candlestick. Most of the time, I'm looking at net flow or Periscope. So Periscope, I'll start with that. Maybe that'll kind of like give us a little bit of insight on how I actually trade the SPY. Periscope is a tool that allows you to see live market maker exposure, or gamma exposure, based on the strike, right? So if you're looking here at my screen, here's SPX, and you're going to see the price action of SPX, right? Really choppy price action. And then to the right here, you're going to see some red and green bars. The red bars are going to be negative gamma, and then the green bars are going to be positive gamma. And so when you're looking at negative gamma and positive gamma, there's a lot of like little, um, there's a lot of definitions out there, right? Like you're just going to run into a lot of definitions, a lot of confusion. And the easiest thing that I like the easiest way that I like to describe how to think about gamma is very simple. Negative gamma is going to result ultimately in a low liquidity, right? So put that vocabulary term in your mind. Low liquidity. Low liquidity just means that there's not a lot of money, right? There's not a lot of money to support buying. High liquidity is going to be the green bars. That's going to be the total opposite, right? There is high liquidity. That means market makers are supplying high liquidity to that strike of 7160. So if you look on my screen here, you can see that there are various strikes. To my left of those strikes is price action, and then to my right of those strikes is gamma exposure. Anything that's red is going to be negative gamma or low liquidity. Anything that's green is going to be positive gamma or high liquidity. When there's positive gamma above price and there's not much negative gamma between where price is and that positive gamma, that means that price could move towards that positive gamma. If you look here over the last maybe 15 to 30 minutes, price has moved from a low of 7150 to a high of about 7156. It's only a 6 point move, but it is enough to show you that price likes to kind of cling to that positive gamma. You see here this positive gamma stick at 7160. It's so large, right? It's bigger than most of the other sticks here. And what that means is that market makers are long gamma at the 7160 area. So that means that price is going to want to cling to that area, right? It's going to want to stay supported at that 7160. Anything below that is going to be negative gamma. Now, this negative gamma is pretty notable in size, but it's not overwhelmingly outweighing this positive gamma, right? So price is going to kind of ping pong a little bit because this negative gamma illustrates low liquidity, where market makers have pulled that liquidity at that 7140 mark. So what's going to happen is price is actually going to want to drift lower, assuming that there's no positive gamma here at the 7160 area. But since there is positive gamma at the 7160 area, even though this negative gamma is here, price is going to want to gravitate towards that positive gamma to find stability. That long gamma is going to want to stabilize price action, right? It's going to want to keep it steady. And so what you're seeing with price action today is you're pretty much seeing a bounce between negative gamma at 7150 that is pulling price down, but then positive gamma, excuse me, 7150, yeah. But then positive gamma at 7160 that is pulling price up. So you're essentially seeing a bounce between 7150 and 7160. Pretty much about a 10-point move is really where we're bouncing back and forth to. So that's what we're seeing right now on the SPY, and I'm not eager to take a trade with that kind of price action. What I want to see is this negative gamma either decrease completely so that price can fall towards that negative gamma. Excuse me, this positive gamma decrease. I want to see this positive gamma decrease completely, and what that will do is if this positive gamma decreases, it'll keep price from it'll allow price, I should say, it'll allow price to fall, because what that positive gamma reducing will indicate, it'll indicate that market makers are reducing liquidity. Right now it's kind of actually growing. If you can see this white dot right here, these white dots pretty much mean that that was the last measure at which gamma was measured at. So with this white dot being right here, but then the end of the gamma stick being, exceeding past that white dot, that means that gamma at that 7160 level has increased over the last few minutes. Over here, you can see some positive gamma at 7165, but look at where the white dot is. That means that positive gamma has decreased from that white dot, because the green bar ends just before that. Oh, looks like positive gamma just increased actually right before our eyes. Looks like, as I was telling you, that positive gamma decreased at 7165. Literally, the data updated and it changed right before our eyes, and it actually increased. So with 65 and 60, right, 7165 and 7160 increasing in positive gamma, I can expect that price is going to want to stay afloat. It's going to want to maybe gravitate another 5 points from 7155, where it is right now, to about maybe 7160, or it's just going to kind of chop in this area because there's some negative gamma down here, but there's also some positive gamma, right? So negative gamma at 7150, positive gamma at 7160. It's about a 10-point move, and price is just going to struggle and ping pong between positive gamma support and negative gamma resistance. Let me check on you guys real quick. Hopefully you guys can still see and hear me. Please let me know if you absolutely cannot. So that's good. It looks like I don't have any complaints about screen. So that's what price is doing right now. Give you guys a moment to kind of digest that a bit. So price just bouncing between 7150 and 7160. So again, if you're just joining, you should be able to see my screen. And I did just go over Periscope. Now, one thing that I like to pair Periscope with is the 0DTE net flow. This is what you guys see me share in the in the chat when I send signals and stuff. Most of the time, I'm pairing Periscope, which is this screen right here, and 0DTE. Now, 0DTE is the aggregate amount, or the aggregate outcome of the aggregate outcome of calls that are being bought minus calls that are being sold, and puts that are being bought minus puts that are being sold. So in other words, this red line that you see on my screen right here is it's a linear line that is measuring the total amount. It's live, right? So it's measuring every options order that comes in that is 0DTE, right? 0 days to expiration. And so what this red line does is it illustrates the total net amount of puts that are being bought minus puts that are being sold. And that net amount is going to be illustrated on this XY axis with zero down here. Um, excuse me, I'm sorry. With zero right here with this dotted line in the middle. Anything above that dotted line is positive net premium. Anything below the dotted line is negative net premium. And then you kind of have another mini XY axis down here with this little cloud, right? This green cloud, red cloud, green cloud, red cloud. What that is volume, right? Volume. So anything above that's green is positive net volume. It's the total net amount of transactions coming in at the bid or the buy. And, or excuse me, yeah, transactions. And then the total net amount of transactions that are coming in at the bid, right? So bid or buy, right? So if the total net amount of transactions that are coming in at the on the options chain is net positive, so in other words, let me say that again. If the total amount of options that are being exchanged on the options platform are coming in more at the ask than the bid, then positive volume is going to show. But if there are more transactions coming in at the bid, then negative net volume is going to show. So if there's positive net volume, that means that more people are buying. If there's negative net volume, that means that more people are shorting, right? They're mostly shorting options. So positive net volume is long options, and then negative net volume is short options. And typically that negative net volume introduces bearish pressure. So then you have the net call premium. Again, it's pretty much the same thing as net put premium, but it's the total amount of calls that are being bought minus the total amount of calls that are being sold. And so with those two illustrations there, then you have it relative to the price action of SPY. And that's that yellow line, right? So right now what you can see with 0DTE is it looks like they're not really interested in calls. They're not buying calls. You see how the green line is flat on the zero? If you look here, you can see that NCP, it stands for net call premium, is only at 156K, 160K, while net put premiums are over 10 times that, 5 million, right? So they are buying more puts than they are buying calls. They're not quite selling calls either though, so it's not quite bearish just yet. Even though they're buying puts, one of the main things that I always like to share is that I never really take bearish trades based off of net put premium. I always want to watch net call premium. And the reason why is I have seen that overall, especially on the overall market tide and also on single names, the most volatile premium is not the net put premium. It's actually the net call premium. You'll see that over days, net call premium will be far more volatile than net put premium, meaning they might sell more calls than they ever buy more puts. So whenever you see net calls selling really hard, but maybe they're just not buying puts, it's still a very bearish scenario because they're selling calls so hard. If you can look here, 30 minutes after the market opened, they sold calls pretty hard. And that's why price fell from highs of like 714 to lows of about like 712, right? So they sold those calls really hard, and that's really what put the pressure on SPY this morning, right? And that's why it's like a bit red. So just a little tip there for bearish trades. I really don't like to see buying of net puts. I really want to see selling of net calls. For bearish trades, I want to see selling of net calls. That's really going to tell you that the pressure is on. Okay. So right now, yeah, SPY is just kind of okay, now this is something that I've talked about here. When price, let me start over. So this is something that I've talked about here. You see how net call premiums have not really moved. They've kind of been trading sideways. That tells me, let me clean up the screen here. See how net call premiums here on the zero x-axis is just kind of trading along that x-axis. It's not really going up or down. It's just kind of going to the side. What that does is it tells me that traders are not particularly buying calls. They're not really making big trades right now. Net put premium has also been a bit sideways, so I'm not really seeing any trends in trading activity. And since I'm not seeing any trends in trading activity, you just want to stay out of the SPY. You just want to protect your money. You don't want to try and trade these moves that seem to be news driven. Because when you look at the trading activity for options, when you look at net calls and net puts, there's not been much activity, since about an hour after the market opened. It seems like the market just kind of like stopped trading. Like traders just kind of stopped buying calls or selling puts, or selling calls or buying puts. Um, they just kind of have been trading sideways, and for that, I really advise that you just stay out of the SPY. Just stay out. So that's why I'm not particularly eager in trading. I did take like a very small scalp this morning, but it wasn't anything to stay in. So so hopefully you guys can still hear me and see my screen. Um, what percentage do you usually like taking first profits, if you don't mind me asking? No, I definitely don't mind you asking. This is where we get money's right. Yeah, yeah. You know, for taking profit and stuff like that, I'll be very honest. Um, you've probably noticed that I don't really tell people when to take profits. And the reason why is I just don't know what your I don't know what your risk tolerance is, right? So oftentimes I just always say see profit, take profit. Me personally, um, if I see that I am like minimum 10%, right around 10%, I really just start to kind of think about taking the money. And the reason why is because most of the time I'm not like trading um how do I say? I'm not like trading to just like catch the whole move. I'm not like trying to catch a trend. SPY is a very difficult ticker to trade. And options are actually designed, especially zero DTE options, are actually designed for you to lose money. And so, as a trader, especially as a SPY trader, you really have to be a scalper. You just have to. You have to just scalp the options. Um, Typically right when I start seeing 10%, especially if I start seeing like sometimes I'll look at the candlestick, and if I start seeing like, you know what, the candle is struggling to push, further in the direction of my trade, I'm just gonna take that profit. So right around 10%, I begin to really actually consider taking profit. For every trade, my go-to like target, if I just had it my way, right? If it was just like, all right, every trade, like this is, my take profit, it would be 20%. That's my golden rule. 20% plus or minus 20%. I just really always do my due diligence in taking profit at plus or minus 20%. If I'm down 20%, I'm like 90% starting to think about cutting that trade. If I'm up 20%, same thing. I'm also thinking about cutting that trade. Now there are times where I'll be down on an option, and I won't even see the 20%. I'll just be immediately down like 30%. Like maybe I'll just look and I'll just be down 30%. Or even 40 or 50%. For those trades, I'll be very honest and I'll say, sometimes I practice bad habits, and for those trades where it kind of blows past my stop, I don't set stop losses, by the way. I don't set any stop losses. I just kind of manage the trade live. But sometimes, I'll like, be posting data or something. I'll be looking at data and then I'll check on my trade and then I'm down like 40% already. And for those trades, yeah, I'll be honest. I'll like sometimes leave them and I'll just let them run. And I'll just be like, you know what? I've already lost way more than I wanted to. Um, and again, this is bad psychology, so it's something that I myself am trying to break out of. But most of the time, if I'm already down 30%, 40% unexpectedly, I'll typically just kind of just let it run. And then, unfortunately, though, like 9 out of 10 times, like it'll just be a total loss. So I don't advise you to do that. I think as a trader, we go through seasons, and some seasons you really have to be very strict on that 20% stop loss and just be like, you know what, like it's already down, 20%. I'm already down 25%. Let me just get out right now and just salvage, my contract. So to answer your question, plus or minus 20% is ideal, but I begin to think about cutting or taking right around 10%. For my sizing, typically it's about like $500 to $1,000. If I'm in $1,000 sizing for SPY, 10%, yeah, I'm taking that. I mean, it's just going to be a quick scalp. I mean, where I come from, I'm not like, looking to make $1,000 a day. If I can get away with 50, $100 per trade, get out of that trade, and then have the entire day ahead of me to look for another setup like that, I might take three trades out of the day and be up $300. And then yeah, maybe I am making $300 a day. And where I come from, $300 a day is great money for just trading. In my humble opinion, I don't know what people's wallets look like and stuff, but so typically 20% on $1,000 position is a great day for me. Like I'll be happy. Or 20% on a $500 position is also about half of that, obviously, and I'll still be very happy about that. If I'm in $1,000 position, 10% is like, yeah, especially if the trade is struggling and I'm seeing that data is not complementing my trade. Right around 10%, I begin to take it, especially if I'm looking at the percentage and it's just kind of like, um, just kind of playing around between 10, 12%, 9%, everything is case by case. So you really just kind of have to manage it and just, if you see that the trade is struggling, some trades, boom, they'll just explode, and for those, yeah, just, you might want to just kind of wait a few seconds and let it run, but if you're waiting a few seconds and you're seeing, okay, trade is struggling, it just went from 15% to 10% to 12% to 9%. For those kinds of trades, yeah, just begin to start to take profits at 10%. Hopefully that helps a little bit answer your question there. Cool. Yeah, I feel like when I've been following some of the day trades with advanced traders, I could have taken profits, but stayed for their first target, and then it drops back and it fires. So I really just been, yeah, just take profits. Just do it. Like, look, trading is really about surviving to the next day, to the next trade. And if you can survive the market, then you beat the market. So if you focus on surviving, okay, right now SPY is moving pretty hard, guys. It doesn't look like there's been any changes in data though, any big changes, if you will. Other than that 7160 growing in positive gamma, we've reached that target right now. It's something that I did mention earlier. If you were on the call, we were talking about gamma. It had just grew, right? So that was a pretty good manifestation. Very small move though, in my opinion. It's not worth trading, in my opinion, because if you just look at that price action, it would have been very difficult for you to scalp a 75 cent move on SPY or a 10-point move on SPX. So I'm not too worried about this move right now. It looks like some resistance is at 71.75. It's about a 15-point move. Zero DTE options are moving into net positive volume at the moment, but check this out, guys. This is a big tip. When I am looking at zero DTE options, you see how price is in the yellow, right? Price is in the yellow, and net calls is in the green. Now, you see how price is on top of net calls? Net calls is below, right? That tells you that traders are not positioning themselves in a way that is suggesting that SPY should just keep trending higher. In other words, SPY is moving faster than trader positioning. Although the net calls are moving, in tandem with that bullish move right now, that 75-cent bullish move, I am cautious of this kind of a move because the trader positioning is not outpacing price. What you want to see is premium outpacing price. Sort of like you see down here when premium is outpacing price to the downside. And eventually, what happens is price will go ahead and follow that premium. But when price is taking the lead, right? When price is moving higher and then premium is moving higher, that tells you that price is moving faster than positioning. And whenever price is moving faster than positioning, I'm just a bit cautious. I'm just a bit, careful because that tells me that the price is very volatile, but traders are not really, supporting that move. What I want to see is traders outpacing that move. Maybe they're positioning for higher price action, and then price action is sort of lagging a little bit. That's the great entry point. That's the perfect A plus setup for you to say, hey, it looks like traders are out positioning price, right? They're positioning for bullish action, but then price is not following through just yet. This is my opportunity to get in before price follows through. But if price is following, is moving faster than positioning, you just want to be careful with that. Okay, so that's what's happening right now, and I'm just a bit careful. I'm not gonna chase this move. I'm just gonna let it happen because I'm seeing that it is moving towards that positive gamma. But I'm not quite convinced with this net call premium trading below price. That tells me that price is moving faster than traders are positioning themselves. Um, so yeah, back to taking profits. Yeah, you just really have to take profits. I was gonna say that the market is about survival. And if you focus on surviving the market, right? If you just focus on like preserving your money, you'll often see that you'll like beat the market. Like you'll look at you know what I mean? If you just focus on preserving your money, if you just focus on not taking bad trades, right? Don't so much focus on taking good trades, but just focus on when to stay out. If you can focus on when to stay out and focus on like avoiding, you know, uh, setups that are not A plus, eventually what you'll start to realize is like, okay, just by avoiding bad trades, I'm actually beating the market. Like I'm actually winning like the little bit of trades that I am taking. It's actually keeping me profitable. And profitability is the goal. It's not necessarily a dollar amount. It's all about profitability. It's all about staying green and being the market. Yes, I'm the same. How do you correlate this with flow data? Correlate what? Jax with flow data? Oh, you mean individual? Or what do you mean? Flow data? Like individual names? Yeah, I have the same problem. Yeah, I'm the same. $300 a day is great. I'm retired, so no big deal. Yeah, I mean, dude, if you're making $300 a day, that's like twice the amount of any kind of like, I don't want to say minimum wage job, but like most easy like side gigs out there that you can do. You're definitely not making $300 a day. At like DoorDash or whatever. Like um, so for me, that's really what. Okay, do you ever look at options flow to see which strikes are looking for SPY or single names? For SPY. No, I never look at options flow for SPY. The reason why I never look at options flow for SPY is because SPY is such a big ticker. For example, let's see, dude, if you look at options flow for SPY, you're gonna be so like um, disgruntled because there's gonna be so many different flows that come in. You're just gonna be like, whoa, like which one do I take? Like first of all, look at the top chains. All the top chains are all 0 DTE, and then you have puts that are 360K, and then calls that are 350K. So looking at flow, looking at flow, you're just gonna be at a stalemate. That's one thing that I stopped doing for. I actually never did actually for SPY. I used to like kind of see some traders would do that, like, oh, SPY calls are coming in, and I'm like, dude, you really want to be careful because SPY is gonna see millions and millions of dollars in flows, and so when you see individual orders like come in on the table, like, oh, someone just bought $1 million of 713 puts and the zero DTE, chances are there's 50 other people that have done that. And so, or maybe 50 other people that have done the opposite, like they bought calls or something. Now, here's something interesting here. On SPY, it looks like SPY is actually going higher on the ticker because it looks like net calls are outpacing price on the ticker. But still, it's not something I'm interested in here. I'm just going to stay out. But yeah, to answer your question, do I look at single SPY individual single orders? No, I absolutely do not because SPY is such a big ETF. It sees millions and millions of orders, and so sometimes it's hard to decipher what is actually an unusual order for SPY. It's much easier to just see the net outcome. Are more people buying calls or are more people selling calls? Are more people buying puts or are more people selling puts? So, do I look at individual flows for SPY? No, they're just not convincing. They're not A plus for me. I want to see the overall tape. I want to see the overall lean on it. So sometimes I look at the individual SPY ticker net flow, but most of the time I'll stick to like holdings or zero DTE. Simply because zero DTE traders always get it right. And then holdings measures the aggregate net premiums for all the tickers in SPY. So it's not SPY itself, it's like Nvidia, Apple, Tesla, Microsoft, right? It's those guys, and it measures the net flows for those guys. It combines all of those. And so when you're looking at holdings, what that tells you is pretty much that out of all the aggregate net premiums for all the tickers in SPY, more people are selling calls and buying puts. So on names like the Mag 7, like Tesla, Apple, Nvidia, right? All those guys, it looks like when you combine all their trades, more traders are selling calls and buying puts. So on the overall SPY ETF holdings, it's bearish. It's not quite bullish. Even though we saw a big move up, it's just not being supported with the aggregate net premiums for all the tickers in the SPY. So this is the difference between taking an A plus setup, right, where it's backed by data and you're like totally confident and you're okay, with losing the trade, even if you do lose a trade, because it's backed by data, right? So right now, I'm just not comfortable taking that trade there. So yeah, I will not look at individual flow orders for SPY. I will look at the overall aggregate net outcome, like holdings or zero DTE. That's the best way for me to figure out where the flows for SPY are going. Got a boat. Cool. Okay. Yeah. So I would like to take a trade though, but I just don't want to force it. I already took a trade earlier today, so I'm not gonna force it. So I'm just on the screen for Periscope right now, just kind of looking. Anybody see any good flows today that came in on the alerts? Let's check those out. CCK. I don't even know what that is. Oh wait, these are damn. What the hell? Looks like we got a banger right off the bat, guys. This is crazy. What the hell is this? CCK. This just came in too. Like literally. Oh well, no, this didn't just come in. This came in at 8:25, so about an hour ago. Hmm. Interesting. Crown is one of the manufacturer for packaging materials building. I don't know what that guy is, but 105 calls for 400K. That's pretty interesting. You got a nice price to premium gap going here. It looks like it moves pretty decent as well. No spot gamma. Very low liquidity though. So be careful with this one actually. Yeah, be careful with this one. Looks like we're seeing some negative gamma at the 100 level, but also some positive gamma at 110. So let's look at volatility and see. Oh, what the hell? Dude, we might want to long this. We might want to long this name. This is weird, guys. This IV rank is at 100, and trying to see if it moves in tandem or. Yeah, no, this is definitely a. Oh, this is an A plus setup, guys. CCK, guys. If you're listening, check out CCK. CCK. This looks like a really good setup for some reason. I don't know why, but I don't know why it's such a good setup, but IV rank is at 100. That tells me that price is going to move really hard really soon. And so they sold calls and it fell. Now they buy calls. Wow, this is interesting. This is something that I really want to keep an eye on, guys. This might be insider trading or something. Because look at the top chains here. It barely sees it. It hasn't even seen 20 contracts as a top chain, guys. This is crazy. And then all of a sudden we see 400K being traded. Very interesting. And they opened it up in like really good like increments. When you see this like multiple green bars, sometimes you'll see flow traders and they'll post just one order. Like, oh, it's just one order, like boom. But when you see like multiple green bars like you do here on the screen, that tells you those are the real convicting ones. Those are the real eye catchers, if you will, right? The bigger unusuals. Um, I don't even know if that made sense, but this is super eye catching right here, guys. When you want to see, um, what you want to see is activity like this. This is unusual, and I think I want to buy one of these contracts, guys. CCK. I don't like the chart too much though. Let me check out the weekly chart. Maybe the weekly chart moves a little bit. Wow, the monthly chart is insane. What the heck? Let's look at the weekly chart. The weekly chart isn't too promising either, dude. It kind of looks bearish actually, but the monthly chart looks crazy bullish. Monthly chart looks like it could run back to 110. Wow, what do you guys think about that? Has anyone seen this? CCK earnings today? Are you serious? Dude, are you kidding me right now? Thank you so much for adding that. Wow, so CCK earnings today. Interesting, guys. Wow, this is overwhelmingly eye-catching right now. Let's look at the daily chart on the gamma profile, see if there's anything there. I'm not seeing anything there. this looks, guys, if you can hear me right now, CCK Crown Holdings looks like a very doing any recap on last week's trades. No, I'm not looking. I cut my Tesla loss. I'm not looking at like any. Let me see what trades I'm in right now. I know I'm still in FJet. I'm down 26% on FJet. Um, I took the loss on Tesla calls. That was just the stupidest thing ever. I don't even know what happened to Tesla today. Estee Lauder, I have one contract left and it's down 19%. Those are the only contracts that I'm in right now. FJet, oh, FRMI too. I'm in FRMI. I got one contract left. I sold most of that position though at a loss. So I have losses right now. I have all losses pretty much right now. I have Estee Lauder 77 calls May 1. I have one contract left at 19%, just hoping that I can make the loss back because I sold most of those. FJet, same thing. I got one contract left at negative 26% down on that. Sold most of my losses on that. Just left one contract just to see if it'll come back. Cut my Tesla position completely because I only had one contract and it was like $700. I lost like 50%. I lost more than 50% actually. Um, so yeah, it hasn't been a good. Last week wasn't good for me. So this is in reference to Tai Chu. Yeah. Um, Last week was really bad for me. If you look on the on the recap, I actually didn't even do a recap last week. But yeah, last week sucked for me. I got my ass handed to me. Like I lost a ton of money. Um, so it hasn't been fun. Um, I'm hoping that this week, the thing about stocks, guys, here's what I'm learning, right? And I don't think this is like a rocket science statement or anything. Um, I'm learning that like because stocks literally move and are measured. What am I trying to say? Okay, because I guess because stocks move, right? There are going to be times where a setup is just not there for several days. Like you'll see that the week before last week, we got really. I was like up. I was up a lot. Like I literally went out and bought a steak and stuff. It was a great week, and and the reason why is because when you look at all the stocks from that week, a lot of those were coming off of the 8-day EMA. So like if you remember Microsoft, we called 1,000%er on that. I sold at 300%. Microsoft was coming off of the 8-day EMA. So at that time, I think it was like a bunch of other stocks too that like flew really well the week before last week. So this is like 2 weeks ago. And you'll see that a lot of those stocks were coming off the 8-day EMA. If you look at most stocks over the last 3 or 4 weeks, maybe about a month, most of in just a month, most of those stocks are up. And the reason why is because most of those stocks were coming off of the 8-day EMA from March. In March, when we sold off so much, what happened was there was a recovery, a small recovery, and it formed a base. For example, let's look at like even CCK. We're looking at CCK right now, like longing it in. Oh, this is a monthly. Sorry. Let's look at the daily. Longing it in like early April, which is about 2 weeks ago, right? Which is kind of what I'm talking about. Like longing it around here was really like what every stock was looking like at that time. If you look at Microsoft, like that was the one where I really banked on, right? Early April, right there, coming off of that 8-day EMA. Same thing I want to say with like who else? I don't know, but like if you look at most of those stocks, they're coming off the 8-day EMA. And so my point is, sometimes you're just gonna see that certain weeks, like it's just not gonna be a good setup for either bullish or bearish. Like it could be moving bullish, right? But it wouldn't be the best entry point. Um, and so yeah, that's what's going on with my trades that I'm in right now. I haven't taken any new positions yet. But yeah, so there's just gonna be some weeks where it's just not there. The setup's just not there. Like the stock is either like well below the 8-day EMA or something, or well above the 8-day EMA. And for those, you just kind of want to be careful. I'm looking at Microsoft right now, and this motherfucker looks like it wants to bounce. Damn. What do you guys think about Microsoft? Wow. Let's look at it again. So yeah, I hope that answered the question a little bit, Taichi. I should have gone longer down on that Google. Yeah, that one fucked me hard too. Same thing with Apple. I don't know if you remember. I took an Apple call last week, and it was a weekly expiration, and I should have done a like a monthly expiration because Apple's been up since literally since I sold. Apple has gone up, and I sold as a loss. Yeah, I think I sold like here. Yeah, last Thursday or the week before Thursday. Let me just look at my options thing. But um, actually, here I sold last Tuesday because when it came down, I was like, bro, what the like? But then it's gone up. Oh damn, what the hell? Apple gapped down hard as shit today. Am I tripping? Is this Apple? The hell? Apple's down today? Oh damn, what the hell? Apple gapped down hard as hell today. Damn, I wonder what happened. Oh, wasn't it like Tim Cook or something like that? Like he stepped down, or did they report earnings? I don't know what the hell happened with Apple, but yeah, that's crazy. Wow. Oh yeah, the open OI shit. Yeah. Okay. Oh, they're starting. You know what? They're starting their lawsuit today. Um, um, Elon Musk is taking. Oh, so what's Tesla doing? Elon Musk is taking OpenAI, Sam Altman, and who else? I think it's like Sam Altman and someone else. Um, oh yeah, well fuck me, yeah, fucking. That's why I got fucked on Tesla. But dude, why? Look at all this net positive volume, guys. That's what made me take Tesla calls, bro. But see, I'm not gonna lie to you. I did see on Friday, like literally at the last like 30 minutes, bro. Like after I already put in my Tesla order and everything, I did see that net volume was falling, and I was like, what the fuck, no. But I was already in, so um, yeah, Tesla just sucks, bro. Like I feel like every time I trade Tesla, it just fucks me, bro. Like it's and the contracts are so expensive, so it's always a bad loss. Like it's just shitty. Yeah, so so that's slip along. Thank you so much for adding that. Uh, yeah, Apple has some news about like AI and those kinds of things and sales, and so I'm assuming perhaps that's why it's having some issues here. But yeah, Taichu, that Google trade was shitty. CCK, man, earnings today, guys, earnings. CCK today, wow. Let's see if there's any. No, these OIs, dude. There's nothing, bro. Bro, there's nothing. There's no OI on this. This is insane, bro. And then you go to today, and there's all this volume. What did they? Crown is one of the world's. Is there anyone tweeting about it or anything? Because this is crazy, guys. CCK, and it has earnings today. Representative Tom Keene Jr. No, this is from 2024. I was like, all right, a bunch of people posting some bullshit. Crown Holdings. State of the art beverage can facility in northern India. What the hell? What else do you guys know about Crown Holdings? Packaging steady accumulate. I have no clue what to think about this stock, dude. I don't know why they would buy that many calls right before earnings. Makes no sense. I'm gonna stay on here for another 15 minutes, guys. Another 15 minutes. Actually, I'm sorry, probably another 20 minutes. What are we thinking about Crown Holdings? Yeah, I'm on the Periscope right now. Or does he mean? Are you in? He's not in the 7170 shrunk. Yeah, it did, huh? 7170. Yeah, it did. Wait, 7170. Oh, so he's saying 7170 got positive. Yeah. So 7170 got positive. So he might be thinking that we might be reaching to 7185. Ooh, that's gonna be tough. It's gonna be tough. Hmm. So there's some resistance at 75. So just be careful. It can reach to this 85 here, if 85 keeps growing. Call out 7175. Could be. Wait, call wall. Why do you say call wall? I would say call wall, but I would say negative gamma there. Yeah, negative jacks. Yes. Um, that was a pretty decent bounce actually from 55 to 65. No, that's 10 points. Fuck that. I mean, you could have grabbed it at 45, but that would have been, you would have had to have been a sniper. CCK. What are we thinking? I think I want to take a contract on CCK. Because why would they do that right before earnings? It makes no sense. And it's at, dude. IV is at 100, bro. I might buy two contracts of the CCK, guys. If you're listening to me, CCK. I am watching CCK. This is a big order here. If you're looking at my screen right now, there's a big spike in net call premium. That is the green line, and that is illustrated via 105 calls being opened, 1,500 contracts exchanged. This chain has not seen over 50. It hasn't seen over 50 transactions ever since its inception in early April, excuse me, early March. It has not seen over 50 contracts traded. All of a sudden, today, it sees 1,500 contracts traded, and earnings is imminent. Wow. What do you guys think? CCK. We're also seeing that IV rank is at a maximum high of 100. It looks as though IV rank and its underlying price action for CCK move in a inverse relationship, meaning if IV rank is to fall from 100, this level of 100, price should bounce higher. this is an incredible confluence that is happening right now. 100 IV rank, large unusual order, net flow price to premium gap. This is I would give this setup an A minus. The only reason why I'm giving it an A minus is because it's earnings, and I don't know what exactly they do. It looks like they do some sort of packaging or something. But this is a A minus setup right here. This is incredibly unusual. Very unusual there, guys. Let me know what you guys think. If you guys have any charts for CCK, let me know because I'm not a big chart kind of a guy. CCK, maybe the hourly will tell us something. Yeah, if the hourly closes above this 103, it could squeeze, or even 102. Looks like it wants to squeeze, guys. I'm not gonna lie. This looks like a really good setup. Very disappointed in Estee Lauder. I don't like to trade stocks that I haven't traded in a while, honestly, or that I've never traded. So I need to stay away from that. But this CCK, man, boy, does it look good. Isn't 7 lines down acting like a pin though? Um, so 7100 won't act as a pin, but it will stabilize price, but as a support. So not as a pin, um, but as a support to stabilize price. So 7160, where's price? 7160 has large positive gamma, right? So with this large positive gamma, it will act as simply a support, right? So this 7160 large positive gamma, all it's going to do is stabilize price. It's going to stabilize it, meaning not necessarily pin it at 7160, but it's just going to stabilize it from volatile swings, right? It's not going to just fall 15 points right now unless Trump says some shit, right? But the price is not going to just fall, 15 points right now because this positive gamma there is going to stabilize the price. It's going to add liquidity. It's supplying liquidity. Market makers are adding liquidity at this 7160 to keep the buying uh, continuous, right? It's going to support the buying. It's adding liquidity to traders who are long on the SPX right now. So market makers are long gamma. So that's 7160. I thought since it's larger than the positive gamma above, it'll pin it or act as a floor. No, it'll just keep it from falling. It'll just keep it from falling. So just support. Um, that's what the positive gamma will do. Um, are you in the live, Joshua? Let me see. I don't think you are. Oh, you are. All right. Oh yeah, there you are. All right, cool. Yeah. So it'll keep it from falling, right? So when positive gamma is below price, it does not act as a magnet to pull price down. It actually acts as a reinforced support to keep price afloat. So the way that you want to think about it is if price is above a large positive gamma stick, right? That positive gamma stick is not going to pull price down. All it's going to do is reinforce a support, assuming that price will run into some sort of negative gamma above. And if price runs into that negative gamma above, price will fall. But if it falls, it's not going to just fall and keep falling until thy kingdom come. it's going to fall and catch support at 7160 because there's a large positive gamma at that 7160. That's assuming if it falls. So again, positive gamma below price just reinforces support, right? It's kind of like another level of support. It's not going to pull price down, but if price did fall down, it would fall and be caught, right? It will stop falling at the 7160 level. Now, if positive gamma is above price, right? And assuming here, like at this 7185 level, you see how this positive gamma is growing, it's very large. Assuming that this negative gamma at 75, like, moves into the positivity, right? So assuming this negative gamma decreases in its negativity, meaning it moves in a positive direction, then price will actually move toward that positive gamma at 85. That positive gamma will pull the price up. But if this negative gamma remains persistently negative, then price, assuming that it bounces off of this 60 level of positive gamma and supplies the liquidity for price to go up, as price is going up and it runs into that 75 negative gamma, it's gonna reject that negative gamma. It's gonna fall, right? But again, when it falls, it's not gonna just fall all the way. It's gonna fall from maybe 75 to the next support, which is the positive gamma at 65. A lot of the times, guys, I always over explain, because I just always assume that someone, you know, might have a language barrier or something like that. English is my third language, so I always keep that in mind. And then I also do it so that way it can be kind of like a video that I can extract or clip out and upload it somewhere for you guys to look at later. So yeah, hopefully that kind of cleared some things. Sarcasm, my first language. Okay, gotcha. Okay, cool. All right, cool, cool, cool. Yeah. So right now, what am I expecting? I could be expecting price to just kind of perhaps maybe squeeze to that 85 level where positive gamma is, but that negative gamma at the 75 is going to be there, and it's going to give price a hard time. So if price can get over that 75, then yeah, maybe we're looking at 85. Um, how do I know if it's going to do that or not? Um, I will look at 0 DTE. Oh wow, 0 DTE seeing some net positive volume. But again, this net call premium that's below price, I'm not quite bullish on that just yet. Let me look at the market tide. Maybe the market tide will kind of give me a pretty good overall view here. I'll be on for another 10 minutes here, guys. So if there's any last questions, let me know. I will be making an attempt. I'm saying that because, anyway, I'll be making an attempt to trade live every day, or at least to go live every day. Doesn't guarantee that I will take a trade. I think less is more. The more that I'm maturing and trading, I'm learning that, hey, the market isn't just going to give you a perfect setup every day. So if you're taking a trade every day, you must just be the luckiest motherfucker alive, or, I don't know. But, sometimes, the market might not give you a good setup. So, yeah, I did take a scalp today, but I'm not seeing anything, worth forcing at the moment. CCK kind of looks really, really good. So just keep that in your back pocket. I might take a position on that as we get closer to the market closing. Yeah, I appreciate it. Slip along. Is there a reason you're using for expiry dates rather than just today's expiry date? Okay, Peter Rome, that's a very good question. Um, if you're still listening on the Periscope, I'll be very straightforward with you and very honest with you. The four expiry dates is something that I have not looked into. I actually think that it's been um, pre-programmed, like pre-selected. But I think the reason why it does that, right? So I haven't messed with it, but I think the reason why it does that is it gives you a weekly outlook, right? So weekly contracts, if you will. Um, if you've been trading for a while, you probably remember that we didn't used to have zero DTE every day. So um, when you're looking at like weekly data, for example, this market, or excuse me, this where is it? Oh, I moved away from it. The zero DTE, that's like on a weekly basis, right? Um, so did I set it up that way? No, I didn't. I think it just is like the default. Um, but I think it's like that because it's like doing like a weekly. I don't even know how to describe it. Weekly days to expiration. Um, and that would be a good question that I would actually ask the um, the developer, so probably Snorlax. I don't think he's a developer, but maybe Dan. Maybe I'll send Dan a message. He's really nice with me. Um, but yeah, it's a good question. I don't really mess with it. I do remember one time I did mess with it, and it totally screwed up the gamma. Like the gamma was like completely screwed up. Like I couldn't get a read on the market. Like it was just so screwed up. So I just always leave it at that, and it works really really well. So in case you're wondering, he's asking about the days to expiry, and I have 2026 selected, and then April selected, but then only obviously there's 4 days left in April, so there's 4 days selected there. So that's what he's talking about there, and he might be referring to why I don't have May and all those other days selected. I guess in theory, like logically speaking, I wouldn't want to see like far out expiry data if I'm trading close, like close dated options, if that makes sense. So yeah, it's a really good question, and I think that's something that I think is a challenge for me to kind of like look into. And Periscope, I'm not an expert at Periscope, but I am 100% an expert. That sounded so cocky. I'm not an expert at Periscope, but I'm somewhat of I'm somewhat proficient at gamma and how price reacts to gamma. So as far as the settings on Periscope, that would be a good thing for me to kind of learn. If you have anything to teach me about that, please let me know. I'm always teachable, and that's why I want to be um, a good trader. Is I'm a teachable person. So let me know if you do have any ideas about the expiry. I will ask Dan or Snorlax, and then they'll probably let me know. But yeah, I just keep it on April, and typically like I just kind of like it just kind of defaults. Like I don't mess with it. So hopefully that kind of answers. The sooner expiry have more influence on market maker hedging. Wait, so the sooner expiry have more influence on market maker hedging. Yeah, that's a good point. I think I see that. Yeah, yeah. So sooner expiry. Oh wow. So you're saying that maybe if I did only today, that would change the data, right? I don't want to change the data though. But yeah, wow, that's interesting. That's something that maybe I'll mess with. Thank you for adding that. Um, yeah, I'll bookmark that. I'm gonna forward that to Periscope, and then that way that can help people. So that was good. Thank you for that. Any last questions, guys? Got about another 5 minutes here. Spy hasn't really presented an A plus setup. It's presented opportunities, nonetheless. However, it's not an A plus setup in my book. At the moment, I'm looking at CCK. It's a really, really good setup in my opinion as far as data goes. Somebody also did mention that CCK makes drink cans, and this is Grok's take. Okay, let's see what Grok says. We're taking financial advice from Grok, guys. Okay, bullish trades on CCK are likely driven by compelling mix of strategies, catalysts, strong cash generation, attractive valuation, analyst support, and all right, that's a lot of bullshit, Grok. All right, major strategic expansion. Okay, Crown, Coca Cola, Pepsi. Here then for bullish positioning. Okay, high growth markets. Northern India. Oh yeah, anything in India is gonna be massive. Okay, cash flow. Yeah, that's big. Oh, so cash flow might be big for earnings, guys. So this is actually pretty helpful. So let's see. Crown Holdings delivered record 2025, 2 billion. Free cash flow rebounded. Spurs 35% quarterly increase. Yeah, I mean their free cash flow is like really bullish. Um, so strong track flow of beating EPS, 100% hit rate. Wow, that's actually very helpful. So they beat earnings all the time. Um, so that's good. Secular tailwinds and sustainable aluminum beverage. I think this is big too. Actually, Crown's diverse energy drinks. Okay. So current context, the risk, the stock is up modestly year to date, 14% over past year, 52%. Okay, 117. This creates attractive. Wow, I think so. This is actually very helpful. So whoever sent that, thank you for sending that. That CCK, that was good. That was like kind of additional stuff there, for us to know about it. So that was good. Yeah, I think it's worth a shot. I think it's an A minus setup, and I think it's worth a shot. Um, yeah, I mean the thing is the biggest catalyst is IV rank being at 100. So if you don't know, guys, IV rank is a tool that a lot of people don't know how to use. But what I do to use it, my strategy on this reformed approach to unusual whales, is you want to first identify the relationship between IV rank and its underlying price action. You can do that by going to the 1 year mark, the 6 month mark, the 3 month mark, and then so on and so forth to kind of get a close update on seeing like what is the relationship. And by finding out what the relationship is, you're able to kind of anticipate how the stock moves in tandem to the positioning of its IV rank. So, with the relationship of a IV rank and stock, you have two kinds of relationships most of the time. I'd say three. You have an inverse relationship where IV rank and price action move inversely with each other. Um, and then you have a unison relationship where IV rank and price action move in tandem with each other in unison. And then you kind of have those stocks where it's just kind of all over the place. So first identify the relationship between IV rank and its price action. And here, the best view that we can see where there's a clear relationship is going to be the month of April. It looks like it's in a divergent relationship or an inverse relationship, whereby the IV rank is rising and price is falling. So since IV rank is rising and price is falling, you can safely assume that there is an inverse relationship between CCK's IV rank and its price action. Now, one thing I forgot to mention is IV rank has a minimum and a maximum of 100 and 0. So if you look here on the XY axis, you have dates on the X axis, and then you have IV rank on the Y axis. IV rank cannot go higher than 100. Once it hits 100, it's bound to actually reverse and go lower from 100 to 98 to 97, 80, 60, 40, so on and so forth. Now, once you identify some thresholds by which the stock actually um, historically displays, you're able to then see really good signals like IV rank hitting a bottom or IV rank hitting a maximum. So, in other words, if you see that IV rank has hit extremes such as 0 or 100, you can bet on a reversal on the IV rank. And once you bet on the reversal of the IV rank, you want to couple that with the relationship that the underlying stock has with its IV rank. So, in other words, with CCK, IV rank is at 100, it's maxed out, and it has an inverse relationship, meaning since IV rank moved higher and maxed out at 100, price has actually fallen since then. But now that IV rank has hit the roof of 100, it's going to actually fall. And once it falls, should the underlying price action continue to move in an inverse way, once IV rank falls, price should actually go higher. And that's what we see historically here. So with IV rank maxed out at 100, an inverse relationship, the setup is that IV rank is going to fall and price is going to rise. So that's what I'm seeing with volatility with CCK. Now, earnings is very risky, guys. But at the same time, you also have traders that are buying call options, which complements the theory that I just went over with IV rank. Being that we're expecting IV rank to fall and price to rise, when we look at the options being traded and we see that traders are buying 105 call options at an unusually alarming rate, that reinforces the bullish outlook using volatility. So this right here is a very curious setup. Very, very curious indeed. I would rate this an A+ setup simply because earnings are just unpredictable. With earnings expected to report today after the market and an expected move of 6%, this can literally go to 105 or 106 just as the price to premium gap theory shows. And again, for those who don't know the price to premium gap theory, it's pretty much when you see a spike in net calls that outpace the positioning of price on the X and Y axis on the unusual whales net flow. In my reformed approach to seeing the market using unusual whales, I've created a strategy that focuses on the X and Y axis data points and how the data is plotted on the X and Y axis. Not only that, but the relationship between the data points on the X and Y axis. So in other words, with net call premium spiking to as high as 108 measured up against the X axis here that is measuring the price of CCK, being that net calls is so-called trading at 108, that tells me that price trading at 102 is unacceptable. Traders are actually positioned for 108. Net calls is trading at the 108 level. Therefore, price should be trading at the 108 level. Now, when you factor in this net volume, that reinforces that there is enough momentum to push price up to catch up to that premium. Hence, the price to premium gap. The gap that you're looking for is the gap between premium positioning and price. Once you see that premium positioning is outpacing price, it forms what I call a price to premium gap, where price is below premium or above premium in a bearish scenario. In this case, it is bullish. So price below premium, and you will expect that that positioning should forecast the price catching up to that premium to the y-axis level being $108 a share. So that's the setup, guys. With that being said, I am going to go ahead and end this live stream. It's been great. Hopefully we learned a lot. I'm going to cut out some things that we can learn from, and then I'm going to send some individual videos that you can kind of look at and learn from. I am going to take a position on Crown Holdings, guys. This is just too good to pass up. I'll probably just buy one contract of that same 105 call. It looks like it's about $2.70 at the moment. So I'm gonna go ahead and buy one of those and just kind of write out that earnings and see how it works out. Thanks for joining. Talk to you guys.